So traders, before I get into today's market update, I want to teach you two patterns here right now. A lot of you guys are really confusing the hell out of this here right now. And you are way over confusing. You're complicating it, and that's the reason why you're losing a lot of money. I'm seeing so many people do this wrong. Let me show you what I mean by this here. And then I'm going to get into this market update here right now. I've got something to show you with the mining stocks as well too. Really, really, really simple. Anyway, so firstly, I want to share with you when it comes down to this PowerPoint here, is this firstly, disclaimer. Just be smart, right, guys? Just don't do anything I do in the markets. And also, you really do know that trading is risky, right? So anyway, the whole thing that I want to share with you here, you guys are way overcomplicating it way too much. I want to share something with you here, okay? Do you know there's very simple analysis? Do you know, look at this here. So if I bring this chart up here, right? Let me just I'll bring just this one blank chart up here, right? Let's go, where's Blanky? All right, blank chart, okay? We look at the chart. Nothing on there. None of your stochastics, MACDs, Elliott waves, Fibonacci levels, and blah, blah, blah. Nothing. You have a 50-50 chance, right? 50-50 chance. Then guess what? Then if we overlay one moving average, and that's all you did, you've now increased your chances to what? 60%, 70%, right? What does that mean? When the market is above the moving average and the moving average is trending up, you only can look for long signals. When it's trending down, up, you get the point, right? You only can look for those signals there. We don't need to overcomplicate it. I see so many people out there, and I've tried, like, guys, I'm telling you right now, some people that are part of my coaching program, right? And I've seen this too in my coaching program. They'll learn something from my coaching program. Me and my coaching clients right now are kicking butt. Seriously, like, we're doing so well this year. It's been a tough year in a result of you've really had to increase your discipline, your patience, all that sort of stuff. But I know one person who takes my simple trading system that takes it, and now he's taken it, overlaid a whole bunch of bullshit, stochastics, MACDs, RSIs, inflation, and then he down 250 grand. Right? It's like, what the hell? Now, by the way, he hasn't been a coaching client of mine for 3 years or something like that. And I just found out recently that he's not sticking to what I'm saying. Right? And the purpose of me saying this here is that it's actually not that difficult, right? So the first thing I want to share with you today is I want to show something with you. I want to show you the one powerful trading pattern with nothing on the charts. Nothing on the charts. Just the chart itself that was supercharged from 50-50 to probably 70-80% success rate in your trading. Then we need to learn for trading systems and so on and forth. This is the whole thing for you guys. You guys are overcomplicating it way too much. Stop complicating it. Right? You just don't need to do it right now. And I'm saying this here because I see so many people. John, here's a big massive cup and handle and the long-term wave and the inflation data and the macros and Trump said this, so I'm going to go trade this. You are a moron. Stop it. It doesn't need to be that complicated. Here's one trading pattern I really want to share with you. All right? It's called what? It's called the no trend to a trend. You know what? Actually, you know what? Class in session. Let's go. Right? No trend to a trend. Here's the thing. The market goes through different phases, okay? The market will go through different phases. The market will go through where there's no one in control, there's no trend, right? No trend through here. No trend, okay? Market's going sideways. No trend at all. Check. Now, with the market, especially look at these big, massive markets. Big, you know, S&P 5, you know, big stocks out there, right? Now, they may do this for a year or two. Yeah. Okay, all right, we understand that. But eventually what's going to happen? The market is what? Going to start to break out and start the trend. Now, here's the thing. The market's going to give us some warning signs and even some signals that say that trend, the new trend is just starting. Now, let me ask you a question. If we could have a really high probability chance that a new trend is just starting, would it be A, be a good idea to look for the signals at that point? Or B, wait for the trend to continue for 6 months and then jump on it? We want to get in early, right? We want to get in as the new trend is just starting. So what is that? This is simple here. Very, 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 very simple. You have a resistance through here. Now, what is an upward trend? An uptrend is what? Higher high, higher low, and then breaking past previous highs. This here is what? Higher low. Where we go. Now, the first sign for an uptrend is what? A higher high. So if the market breaks out through here, whoosh, like that. What's happening here right now? We've made what? We've made a higher high. Nothing on the charts. None of your bullshit indicators and stochastics and inflation data and macroeconomics. Who cares? right? You are way overcomplicating it. One simple trading pattern. This is the reason why my trading is so good now, because this one simple thing here, right? Or many simple things, but this one, higher, higher. This is now telling us what? After all this time, and this could have been whatever, right? After all this time, then the market comes down, finds support, creates the higher low, and then does that on you. And then breaks, and guess what? Now, this point right here, you have just gone through no one in control, so bad time to trade, to now the market's starting to tell us, oh, we're just starting to trend. And typically what happens here, we end up doing something like that. And you got in down here. One simple pattern. What is that? When the market breaks out, makes a higher high, that's now telling us, oh my goodness, we could be starting to trend. Then we need the higher low. Right here, the trend starts, right? It is just so simple, right? And you see this here from time and time again. And you see this in all different time frames, right? All different time frames. If you go look at silver recently, silver on an intraday chart. Now, there's two different types of levels here, right? Two different types of levels out there. It's the same, but different here. You guys are way overcomplicating, right? You don't need to complicate it. Stop overcomplicating it, right? Oh, I'm going to try to be smart. Do you know you trying to be smart is losing your money? I'm dumb. Duh. Give me pattern. Duh. Trade it. Make a money, right? So there's two different types of patterns. There is this one here, and then there's this one here. Now, what am I talking about? What are you talking about, John? Okay, cool. The first pattern is resistance, breakout, higher, high. Oh, we could be now starting a new trend because it made a higher high. Come down, make a higher low, break up. Oh, now we're starting the upward trend. Big probability we're going to do that. Or we have this down like this here. It breaks out, higher high, comes down, higher low, and then now starts this upward trend. Higher lows, higher lows, higher lows, right? Two different phases here. What I'm about to show you right now on the silver chart was exactly like this, and this is exactly what happened on the silver chart just recently here, right? And what is that? Let's bring this over here, right? You don't need to overcomplicate it, guys. Stop complicating it, right? I just see so many people. You don't need to do it. You've been led down the wrong path. Or 90% of the crap on these platforms you don't need to use. It's just that, oh, look, it's flashy. It's in. Oh, this is... No. Then you overlay all these indicators and then you have no idea what to do. Good job. I'm using these indicators to help with my trading, and then I put them on and I have no idea what I'm doing, right? So let's go to silver here. Silver. Now look at silver. What did silver do? This is the silver 15-minute chart. See the pattern? Remember the pattern I just drew here? What is this? Why did silver have a big move up from here? Say it with me. Say it with me. Right? It's all the same thing, guys. There's nothing new, right? Absolutely nothing new. Say it with me, right? We have a major resistance point through here. And as you can see, we'll go low, lower high, same high, lower high, lower high. What happened here? We actually started to do what? We started to make higher high here, high. See what's made a higher high? Then it came down, did what? Came down, found support, did the higher low, and then bam, look at the move. Look at the move there. Look at the move. Why did it have such a big move? Because the market said, right, the buyers are back in control. Here, oh, bam. You see that through there? So you guys do not need to overcomplicate it. Stop overcomplicating it. It doesn't need to be that there. Well, I'm going to try to be smart, John. And especially you guys that are trading options, well, I'm going to do the spread strategies and the debit spread strategies and the selling options. And I'm going to do these calendar spreads. You guys are morons, right? You guys are morons. It's like, especially if you guys are trading options and doing that sort of strategy, why the hell would you trade a strategy, especially doing credit spreads? Why the hell would you, one, limit your profit, and two, have more risk than your profit? Right? If you guys that trade options, you guys know exactly what I'm talking about. It's the worst thing to do. You want to be able to have big profits, small losses, right? That's the name in the game. Well, trading credit spread strategies is the worst, I think, idea to actually do that. Jump on big trades, okay? Jump on good trades. And you see this here for time and time. And let me show you this here, right? This is my little PowerPoint thingamajiggy here. And I've got so many screenshots I can show you here. But the main ones I want to share with you is exactly the examples of what I'm talking about here right now. And why this is just so important to understand this one simple thing. And I'm not done yet. I've got point number 2 coming soon, right? This is point number 2. Two simple things on the charts. And I promise you, it's going to blow you away. You're going to start to go from a 50-50 probability to a 60-70, probably then 80% probability of you having a successful trade. And then all it comes around to having good entries, good trade management, and you are on your way. Let me show you this here, right? So what I was talking about there, right? The different things here. Now, what I'm talking about here is this. Let's go to trend analysis, right? Look at this here. Hey traders, just a quick heads up. I'm actually giving away free access to my Mastery Trading course for a limited time. If you go to johnsfreegift.com, or there should be the first link in the description. The fact is that 80 to 90% of the stuff that you learn or you use on these trading platforms is a complete waste of time. And only about 5 to 10% of the stuff that you actually learn and use is going to move the needle in the positive direction for you. And that's over the last 20 years, I've put everything that has helped me move the needle in the positive direction in this here, and I've left everything else out. So, go to johnsfreegift.com right now and grab complete free access to this Mastery Trading course. This is an upward trend. Remember I said before, there's two different types of trends, right? There is what? If we have this resistance, oh, no one, it breaks out, higher. Oh, here we go. We could be starting a new trend now. Let's get in now. People are like, oh, I'm not too quite sure. The market's telling you, right? This is where you're like, listen to the charts, not those damn indicators. Oh, but the stochastic is overbought right now. Who gives a shit? The market, the big boys who make these patterns are talking to you, and you're looking at a damn laggy indicator. And by the time the indicator turns around, it's already gone up too much. Listen to the charts. It's telling you something, right? Then it makes a higher high. Now guess what? What do we need? Come back down, forms a higher low, comes back up. Now guess what? Now we've started the new trend. And then we end up doing something like that. Look at this here. What happened? Look at this. Resistance. Look what happened. We actually broke out higher high compared to these highs here. It came down higher low. Ba-bom. All the way up. See that through there? Right? Same with this chart here. Look at this shit. Look at this chart here. Here's another example. What happens? You see it all the time, right? Look here, sideways. No one in control. This is the worst time to trade, by the way. This here is telling you do not trade. It's not going up. It's not going down. You have a low probability. So not only do you want to be able to get into times where actually the market is actually moving in a direction, okay, we have a trend, we have someone in control, meaning the buyers are buying it up, higher, low, so on and so forth, or selling it to sellers. But this is also to tell you, this is the worst time to start trading. Why? Because you're going to get chewed up. It's not going up, it's not going down, there's no probability. Get out of there, run away, go find something different. Until it starts to break up a higher high, higher low, now we start to look for this signals here. Because look what's been happening here. We're doing this here, probably going to break up here real soon. Right? You see that through there? Look at this here. This here was the silver chart I was just mentioning to you. See the different angle? This here is an actual stock right now that I'm looking at, or that I've been watching now for a while. It's a stock here, and it's a weekly chart. And guess what? This weekly, guess what? Sideways. All the resistance points through here. Resistance, right? What's happening through here? No one, right? This whole weekly chart, this is probably about 2 years. Nothing going on. But look what happened. Listen to the market. What does listen to the market mean? Remember? Once again, resistance, higher high. Hey, John, we could be starting the new trend. I should be looking for a trade here. Come back down, find support, break up, and then we typically then go for a big move. What's this here? Breaks up, higher high, come down, higher low, breaks up, and then look at the move happen ever since. This is a weekly chart, guys. So this is happening here for the last, I don't know how long, right? It's like, it starts with A and ends in lot. What does that say, guys? Right? So it's just so obvious, right, guys? And the thing is that actually, if I'm looking at this back here, this whole move from here to here has been the last year and a half. So yeah, so this was 2 years here, and we've had a year and a half bull move. You want some more? You want some more examples, right? Of this one simple pattern. Do you notice? Look at this here. There's nothing on there, right? You don't have to complicate it, right? You can do really well from trading, but you are stopping you. One, you focus on all this other crap out there, and two, you're trying to make small profits. Get in on a good trade and hold it for a few months and jump on a big move, right? Let it go. Gold, right? Gold. What did gold do? Why is gold being such a big bull move? I wonder why. Why is gold going such a big move? Let me show you why. Look at this here, right? Class in session. Here we go, right? Forget the moving average. Who cares about the moving average? Just the chart, right? Just listen to the chart. Here we go. Ready? Check. You guys, I'm telling you right now, if you just simplify it and stop trying to be, I'm so smart because I understand the economics and the fundamentals and the inflation data and the macroeconomics and the debt bubble's going to explode and therefore I'm going to go trade gold. Stop it. Right? You are doing yourself your head in. I guarantee you 90% of you guys are doing, 90% of you guys are sucking right now with your trading right now because you're trying to be too smart. Right? Smart is not the key. I'm trying to, one pattern, 50-50 probability standard. And then another pattern. Look at this here. What is this? What is this? What's this? Oh, hang on a minute. John, it's one of those thingamajiggies up here, right? Major resistance all through here. This is a weekly chart. What do we have here? Let's check this out. 1, 2, 3, pretty much also 4 years of why gold went sideways for all 4 years. Then look what happened. There's a high. It broke out, made a higher high, higher low, and broke up. Who's in control right now? After all this time of gold saying, we're not doing anything for 4 years. Now we break out. What does this mean? Remember, sideways, higher high, higher low. This is now the start of a new move. And then what did gold do? Oh, gold is in such a big bull move because it's how the markets work. It's so simple. So simple. Simples. Now, I'm so passionate because I'm trying to teach you guys. Listen, 20 years of my own personal trading. I'm trying to show you the light. Do you see the light? Right? You guys, I'm going to look at a YouTube video, look for the next ID, the next smart indicator. Oh, this is a beautiful little wave indicator. That's the secret sauce. Hang on a minute. It's the AI. No, hang on a minute. It's the count. When it gets to count 9, then that's, oh my goodness. Stop it. If there's a major resistance and it breaks out, makes a higher low, you're probably going to be jumping in on a very big move. And then if you jumped on this entire move or most of this move and you're only 50-50 right, that means 50% of the time went down here, you got stopped out. 50% of the time you that. It's called you make money. But hang on a minute. I know what you're thinking. Hang on, John. I have to be in a trade for a couple of months. I have to be in a trade for 3 to 6 months to capture a big move. Screw that. I'm looking to take 10 trades this week and make $200 a trade. You keep trading like that, you're gonna get your face ripped off. Switch it around. Jump in on a trade, hold it for a month, and look for a 5 or 10 grand profit. And then when you start to increase your position sizes, then you can start to look for a 50 or 100 grand profit on a trade, and not a $1,000 profit here. You see the differences here, right? You want to start make big profits? That's the way to go. Now, step number 2. This is step number 1, right, guys? Step number 2 here is this. Is the whole thing about this here is one simple moving average on the chart. And that's all I'm talking about here. And I'm going to be using the mining stocks right now because this is what's happening in the mining stocks here. Very, 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 very clearly, very obviously. And it's just so simple that even the grandma can talk about doing it, okay? Now, we've talked about highs and lows. Look at this here. Whenever the market is actually moving either up or down, higher, low, and so on and so forth, if the moving average is trending up through here, any pullback, any drop towards it is probably going to be a pullback. Do not try to short a bull market, or do not be trying to short any market when the moving average is doing that. Right? If the moving average is doing that, and we've had a move up and then we have a pullback to here, more times than not, the moving average, which is like a moving indicator, is going to do what? Exactly what this section through here is doing, right? Look at this here. Push it up, push it up, push it up. Now, every now and then we get a drop here, but we're talking about probabilities here, right? Look at this here. Drop to the moving average, push it up. Drop to the moving average, push it up. Drop to the moving average, push it up. You see what I'm saying here, right? It's every single time from here. And even when we look at this is the daily charts here. 52 on the daily charts. Go back to the gold chart because I know how much you guys love gold. Not me. I like me some platinum. I'll get to that in just a minute. Right? But look at this here. Right? Whenever the moving average is moving in a direction, when the moving average is overall flat, there's two different types of moving averages here. There's two different types of angles of the moving averages. 24 on the weekly, and 52 on the daily. If the moving average is doing this, see how the overall pattern is just pretty much flat? If the moving average starts to do that, it's trending down. If the moving average is doing that, it's trending up. With me so far? Cool. Class in session. So here's the thing. Check this out. So look at this here. So as the market is moving up through here, right? The market is moving up. See how the moving average is up. You would not want to be looking for shorts. Again, if you trade the daily charts, if you guys that trade the 5-minute charts, use this one thing. And put the moving average on there and squeeze it up. And if the moving average is doing this, any drop, push, any drop, push, any drop, push, most of the time. Then we go flat. Look at this here. Then we start to pick up. And any drop push. And the market will push. There's a lot of momentum within the moving average is like a momentum indicator. And the moving average with the momentum indicator is this, right? It's like it's a momentum indicator. And people that are trying to short are getting their face ripped off. And all you have to do is just wait for the next drop to go with the momentum. And as you can see, whenever we do get a strong momentum, there's a big move. And all you had to do is what? Just go with the momentum. The moving average is going up. It's showing you there's momentum there. This is where you can have the big profits and small losses. This is where you're going to have a success rate increase and all that stuff from there. So that's what I wanted to share with you there, guys, across the board from there. I think it's just really important to understand. And this is where, guys, the understanding these different types of patterns through here of the one, which is just the major resistance breaking up, becoming support, and it's not just resistance becoming support, but it's telling you we're starting a new trend. The reason why it's so powerful is because, once again, the market won't just stay with no trend all the time. It's going to eventually break out or break down, right, to start a trend. If it's going to break down, it'll look for something like this here, right? A breakdown would be what? There's the major support level. It'll break to the downside. It'll come back up, rally back to the high side, and then start lower high. It'll start here. This is the point you want to be start to look for trades. Why? Because it's starting a new trend. This is the start. Where a lot of traders, they're starting to, as the market's been dropping for a while, now traders are starting to get involved. Oh, let me get in here. No, the reason why my trading is so successful is because I get in here. I'm getting in right here and then holding it for a couple months and jumping on a big profit. You see what I'm saying here, right? So stop overcomplicating. You don't need to, right? Unless you want to keep losing money. And by the way, you don't need to be smart. And the reason why you're not making money is because, one, you're not even following some simple patterns. Two, you're overcomplicating it. And three, you're using all these other bullshit indicators because you think you need it, right? I got them. The MACD on the monthly chart, John. Shut the hell up. Don't tell me about MACD on the monthly chart. Keep it simple. Oh, I'm going to use the MACD on the monthly chart. Then you go trade the daily chart. You get into a trade today. You looked at the monthly charts, indicators on the monthly charts. Then you saw the daily chart today. You got in a trade today. And 2 weeks later, 2 days later, you're getting out because you're freaking out because it's going against you. Hang on a minute. You are all over the place like a little monkey. Oh, I looked at the monthly chart, John, and the MACD was doing a cross. So I went long on the daily charts. And 2 days later, I got freaked out. You're a moron. What are you doing? Like, seriously. Firstly, you're looking at a monthly charts. Keep it congruent, right? And secondly, you're using a MACD, right? You don't need to overcomplicate it. Keep it simple. I've just given you 2 simple things. Firstly, step number 1. Step number 1 is what? You got a 50-50 chance. 50-50, right? Step 2, with the whole channel thing, you probably, that's supposed to be 5-0. Step 2, you probably increased your chances to what? 70% now? Probably even more. With that whole, resistance breakout, start new trend, you probably increased it. Number 7. And then number 8, if you can start to use the moving average, like I told you before, you probably increase it to 80+% success rate by 2 simple rules. Well, I need the stochastics and the MACDs and the elite waves and ABCs and 1, 2, 3s. You are a moron. Right, stop overcomplicating. Now, market update time. Let's get straight into it. Right, so let's go check out the markets for today and let's see what's going on here. So we'll use this chart here, and right now with silver, gold, should I say? Silver, right? So with gold right now, we're actually seeing that gold is still part of these volatile times. There's these times when the market goes through these different phases. We go through trending phases and we go through these what's called energy building phases, right? We go sideways, build energy, building energy, building energy. We're going through another building energy phase. This is the worst time to trade with these phases because when we're using energy, we're having a big move here, using energy, using energy, using energy. When we go through these what's called building energy phases on these daily charts, as you can see with gold, what happens in these phases? It's up, it's down, it's up, it's down, it's up, it's down. There's no probability. Remember I said before, right? Trading's not just about the techniques, but trading's understanding these 2 different phases because once you actually understand these phases, guess what happens? You say this is the wrong time to get into it because it's going to be volatile as it's going through this energy building phase. Look at the volatility here, up and down, up and down. Volatility here. Look at all the volatility all through there. See what I'm saying here, right? So this is the time. Gold is one of these times for a trader anyway. Long-term buy and hold. This is not to do with you. Stop looking at a short-term analysis that might last for a couple of months and trying to, whoa, I'm going to go sell my physical gold. Come on now, be smart. Right? In fact, don't do anything a YouTuber says. We're just YouTubers, right? We have no idea what we're talking about. Don't listen to us, right? Actually, do listen to me, I promise you. Use the patterns I teach you today, right? So right now, what's happening with gold, on a trading perspective, it's very iffy. Like, what is really going to happen here, right? We don't know. Is this going to be the end of the move? Are we going to go through another big move? And right now, we're going through one of these phases. How long the phase is going to last? We don't know. But right now, it's just a bit of a cautionary tale to say step away from that through there. Looking at the silver market, and the silver market is definitely one that I've been really focusing on quite a bit, actually. This is still looking at the weekly charts here. You see that big resistance through there? We're probably going to make a really nice move to the upside from there when it comes to that through there. If I go down to, what I was talking about was some of the mining sector, and look what's happening in the mining sector, right? Really, the mining sector is really starting to gallop away, right? Really starting to pick up some steam, and it's been like the silent little dog, right? Silent little dog. Look at this here, right? So the mining sector is, the GDX is only about 20% away from its new all-time highs. Look what's been happening here, right? We've been silently, we have, haven't we? Even for this time here, right? Look at this here. The last 6 months, we've been really trending up strongly. Remember I said before about the moving average, right? What remember I said before? When the moving average is doing that, if the market does drop, we're probably going to get pushed back up. Drop, push back up. By the way, bit of FYI, if you guys are looking for good entry points, right? Wait for the moving average to come back up. When it comes back down to the moving average, you might want to look to buy there. Wait for the... John, it can't be that simple. One moving average? I need some other rules, right? I need to go check my inflation data. Stop it, little monkey. No, right? So, I'm gonna die on you guys doing this YouTube video, right? So you see what I'm saying here, right, guys? It is not that complicated. Stop doing it, right? So that's what's happening through there. A quick little update across the actual indices right now. We're just still going through a bit of a flattening out period. Nothing much going on. It's gone through a bit of a quiet phase, right? We're exhausted. We're totally exhausted. We need a flattening out period, which we are. And so the whole market is just exhausted. And the NASDAQ as well too. It's slowly crawling up from there. Again, we're not ready for a big move up. Not yet. And the reason why I say that is if you just look at the moving averages from here, right? And by the way, in any big bull move, we don't just go straight up, right? We will eventually start to do what? Even through here, we've had higher lows, higher lows. See, that's a big bull move, right? But what also happens in the big bull move? See the moving average in the big bull move? That's what happens in the big bull move, right? We do what? Higher high, higher low. Hang on a minute. There's that one of those things. Remember I said before? Higher high, higher low, higher low, higher low. The big bull move here, but look at the moving average trending up. So we're going up, but this is the moving average here. This here was the moving average. So even if we do start keep crawling up, we're not due for more upside to come, guys. No way. Right? Not yet anyway. And same for the S&P 500, same sort of thing. We might be crawling up, but go back to the weekly charts. Look at the big picture, right? Look at this here. Strong moving average, big bull move. 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 Weak moving average, something's different now. It's like, John, what the hell are you on, right? And anyway, and the last thing I want to share with you guys is probably what I had on the good old thumbnail on this video here for you guys. And that is the good old what? Platinum, guys. This is the platinum chart. Platinum. Platinum is the bee's knees, the cat's ducks, and for you guys, you guys are like, ooh, I'm gonna go trade gold right now because gold has already made a big move. You're like, yeah, good on you. Good job for you guys that are getting in gold for the last couple of months. Where were you a year and a half ago when it was just breaking out and just started a new trend, right? Look what I'm doing. Hey guys, platinum's potentially just starting a really nice new trend and it's just breaking out right now, and we could be getting ready for a really big move over the next 6 to 12 months, and it may be start of that really nice new trend. And if it does break up and we start to do this here, we could be getting ready for something like that over the next 12 months because we're just breaking out right now. And what am I talking about here? I'm talking about this guy right here, right? This one right here. Firstly, we broke it out, but if I zoom right in, what do we have here? Remember I said the pattern? Remember the pattern? What is the pattern? The pattern is what? The pattern is sideways, break higher high, higher low, big move. What do we have through here? All that through there, right? Oh, John, high, 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 up, down, holding support. Now, it doesn't mean it's going to hold support. We can break down here. But if this now continues to hold a support and start to break up through there, guess what we're doing now? After all this time, out of all the examples I've given you, no trend, what is happening here? Some trend, right? No trend, some trend. Or no trend, start of new trend. No trend, start of new trend. No trend, start of new trend. Right? You get to what I'm saying there, right, guys? No trend, start of new trend. No trend, start of new trend. So anyway, traders, I hope this really helps you out. Traders, I've been running a 95% off flash sale to my Inner Circle coaching program to celebrate my son's birthday. And so what I'm doing right now is I've been running a massive 95% off. So instead of the normal price of $10,000, you can actually get it for $495, and that gives access to me for the rest of this year for the weekly coaching sessions, live weekly coaching sessions, and all my top trading strategies for $495. That is going to be ending real soon. So go to johnscoachingsale.com. That is JOHNS coachingsale.com. You can get access to that right now.